Sarah, we know for many of you, this is an uncertain time. You're watching that 401k and you're thinking, what do I do? We're joined now by someone with some real professional experience. Scott Linn, a financial advisor with BCS Wealth Management, joining us here in the studio today. Scott, thank you for your time. You're helping and probably fielding a few phone calls, I would think, these days from people who are watching their retirement, watching their investments, and are very concerned because we're down. We hit that bear market officially yesterday. Let's put a definition on that real quickly.
Right. So yeah, what a bear market is when the market drops by 20% from its peak. So as you and Sarah mentioned, yeah, we did officially hit that with the S&P 500 yesterday. We actually hit that mark 2 or 3 months ago within the NASDAQ as well. So some of the growth stocks have been hit a little harder and a little quicker than some of your other larger cap stocks in the S&P 500. Let's
start broad. What are you telling people who are calling you going, what do I do, Scott? What do I do? My investments are way down. I'm really concerned. What's your advice to them today?
Right. So the most important thing, first and foremost, is to have a plan. So, if you don't have a plan, I would put a plan in place. Understand why you're invested and what you're invested in. Understand what you have, what the purpose of that money is. And again, just to stick with that plan. So the worst thing that somebody could do is to sell out when the market does sell off like this. At that point, obviously you're locking in your losses. So the markets, unfortunately, they go up, but unfortunately they do go down as well. And it's uncomfortable to go through a bear market, but it is something normal. It doesn't feel normal when you're going through it. But it is something normal within the markets, and yeah, the best course of action is to stick with the plan, ride it out, and continue your strategy that you have.
We see the downs, we see the ups, and the key is the long term. But I'm thinking tonight there are probably some people who are watching like, Scott, my plan is to try to put gas in the car or buy groceries because prices are so up. So is it wise advice to don't worry. If you don't have a plan, now is the best time to get one?
Exactly. Yeah. I mean, no better time than now for sure. No better time than the present to have a plan. So, work with your advisor. Again, understand, what your goals are and build a plan around those goals.
Some real concern, I think, at this point about inflation and the impact on the markets. I think a lot of people are maybe wondering, is this a good time to jump in? Stocks are down. Would you advise people to throw money into the market at this point?
Yeah, I think so. And that's, I want to be careful and not say that the market cannot go down further from here. Obviously, the market can continue to go down. But I do know if you get into the markets today, you're buying at a better price than you would have been buying at 6 months ago. And again, no better time than now to create a plan, to come up with a long-term strategy and invest accordingly.
I think the real spook for the market was, the spooky news was, and I hate to use such an unprofessional term, but the thing that kind of seemed to set everybody off was that news late last week that inflation is in fact worse than some had thought it was, and that it doesn't seem to be going away anytime soon.
Sure.
Is that for you the big concern, and are you concerned we could be moving into a situation where this could go out for months?
Yeah, it absolutely could. So you're exactly right. Yeah, inflation has peaked. If you haven't noticed it, go fill up your gas tank, right? It hurts a lot more now than it did again 6 months ago. But yeah, that's, and when inflation does go up, the Fed begins to increase interest rates. That causes the markets to reprice equity prices. And that's kind of what we've seen here, in the first part of this year so far is the markets repricing that in the face of inflation.
Many of the people you work with are depending upon that retirement savings for their monthly income.
Sure.
And I think those must be the ones who are really concerned at this point. They're not in the job market. They're depending upon that investment. What's your message to retirees tonight who are drawing down that 401k and are really, fingers crossed, hoping that it can get them to the finish line?
Yeah, absolutely. That's where that plan comes in place. So as long as you have a plan, and I would advise any money that you really need in the next couple of years or so, I would not invest in the market and probably should not be in the market. The markets, as we've seen, are volatile. They go up and down quite a bit, and we don't know what the markets are going to do year to year, certainly not day to day. So any money that you need within the next couple of years probably does not need to be invested in the market. It needs to be put in something more conservative. Anything in the equity markets should be more for the long term to help outpace inflation.
And for families who are struggling to pay those bills, it's never too early to start saving for retirement. Is that a fair
Absolutely.
wisdom?
Yep. The earlier you start, the better off you'll be. Yep. That compounding rate of return long term goes a long way for sure. Yeah.
Scott Linn with BCS Wealth Management. Thank you for your time, and thank you for the calming voice in what for many is a bit of a turbulent few days in terms of investment. We appreciate it. Sarah?